When you combine the 4 to 5 largest STR companies in Europe, they still have less than 2% market share.
Really surprised of how much money they spend on tech stack. It may be from 5 to 10% of their revenue.
This is incredible to have 3 of the largest PMCs in Europe on the panel, and they all run their business of proprietary tech.
Seasonal markets are hard if you're doing the full property management.
You made a very bold statement. I don't know if I'm ever going to see that.
Be extremely local and be extremely global on the other side and combine the two.
We're doomed to grow. You are listening to STR Global Unlocked, brought to you by AJL Atelier, the show where I speak with the leaders shaping short-term rentals worldwide. I am Simon Lehmann, and after 2 decades buying, selling, advising, and investing, I've built a network that spans continents and categories. This podcast brings that network to you. Real conversations, global insight, no PR fluff. Let's get started. First, Alex Limpert, co-founder and CEO of RentalReady, the AI-powered property management platform, and the co-founder and CEO of GuestReady, one of the leading urban STR operators in European and the Middle East. Next, Antoine Serrurière, founder and CEO of COCOONR, the fast-growing French operator, known for deep regional expertise, strong local brands, and highly disciplined operational backbone. Last, but definitely not least, Harold Luberdick, founder and CEO of Happy.Rentals, a long-standing leisure-focused operator with decades of experience across some of Europe's most attractive resort destinations. Today, we'll explore how the European short-term rental market is evolving, from operating models and consolidation to regulation, technology, and what the path to profitability really looks like. Gentlemen, it's great to have you on the show.
Thanks, Simon. Hi, everyone.
Great to have you.
To be here.
Great to have you here, Alex, Antoine, and Harold. Let's jump right into it. We want to kick this off with the state of the short-term rental industry in Europe. Let's start broad. You each operate in different regions and different models. But when you look at the European STR market right now, how would you describe the state of the play? What's driving growth and what's holding it back? And I want to throw that off with Alex. GuestReady operates across multiple countries, and what you're seeing from pan-European lens.
Yeah, very good question. And my answer is it really depends on each market. It also depends on the time. I've been in this industry for a while, so over the years, I've seen that some markets are seeing different dynamics and are growing faster than others in a certain time. And then the next year or a few years afterwards, it changes around and another market is growing faster. At least that's been for us in being in different markets. I would say one trend we see in Europe is certainly regulation, especially in urban areas. It's only becoming stricter. That makes the whole space professionalizing. Another trend that we see in less regulated market, and here I'm talking about Dubai, for example, is that a market that is less regulated attracts a lot of owners, and then there's always this demand, this shift between having too much demand on one side or another time you have too much supply. I think recently it's been a lot of supply coming onto the market. So it really depends on the market. And happy to dive a bit deeper into some of these
absolutely.
That
we'll get to that in a point. So thank you, Alex. It's interesting. You have built some flexibility around your portfolio as well in terms of markets you can enter and you go into. And now you're saying, look, Dubai is happening. Obviously, when it's less regulated, you have more competition at the same time as well. So that goes with the other. But Antoine, in France, you're working in a very tough place, one of the most regulated markets. What's your read from within the French market environment for COCOONR?
Yes, we are just in France for the moment with COCOONR. So we know well our market, and I should say our markets, because each city or each area, region is different. It's really a fragmented market. and each market is pretty different in terms of growth or with regulation directly, typically in such markets. So we have to be really focused on well knowing our market, our regulations, and we need to adapt to each of them, like if we were in several countries. We are in just one country, but our multiple markets are really different from one to another, so we need to be really focused and adapted in terms of demand and offers and regulation, etc. So it's not European because we don't have so much problems as if we were in several countries, but it's a lot of adaptation because we are in several markets, even if it's in the same country. So we need to be really focused on adaptation.
So Harold, you've been in this game probably the longest here, and you've seen a lot within the last 5 years. How would you summarize some of the biggest changes you have experienced in the last 5 years while you're being in this business, also in relation to regulations, and how exposed are you at Happy Homes, Holiday Homes with that?
It is indeed a very big topic, the regulations. I see it all over the place, and every country is different. And indeed, Antoine, I agree. Every place we open, there's different regulations, different tourist taxes, different. We have all kinds of words, but we work in different countries. So we work in leisure mainly, actually. So that's our main target. Yeah, and I see exactly the same as you guys. I mean, every area is different. Working mainly leisure, actually, as an area. And we are working mainly into actually warming cold beds in places where actually there's not too much organization in terms of property management. Yet, that's where we actually are the strongest. And that's where we develop. And that's where actually also the regulations are still to be formed often. But in many places we work also, there's regulations which are getting very strong, like in Italy, like in Croatia, in France. Regulations are getting quite strong, actually. So yeah.
So you're also using flexibility as the market matures. If I would throw out, especially to you, Harold, would you also say that the STR market in itself hasn't matured while we're facing all these challenges from a regulation standpoint?
Well, one side is maturing, actually. On the other side, there's still so much possibilities to do more. If you look at all the beds which are not used still, and there's still so many houses which are empty in many places where there's no serious property management, and there's actually still so much to be developed there. If you all look at the places which are rented by the owners themselves on Airbnb, or actually they do it via one of our companies who do the commercialization. And there's still a lot of people out there who have homes, and they use them sometimes a year, and they are cold beds to the area, and they can actually still be used much more than now. And that's actually a huge development area, in my opinion. So have a proper local property management service to these people is actually it's a big opportunity, and it opens. I think that this market can be 3 or 4 times bigger than actually it is. By just being there and actually property manage these properties.
Yeah, I totally agree. I recently attended a destination management conference in Munich, and we were talking to a lot of DMOs who still, let's say, struggle to turn cold beds into warm beds, but supply is there, and owners are still using legacy distribution channels as well. And I think there's so much education to be done to bring some of these tourist destinations online and support them. And that's something we do at AJL now as well, that we're working with DMOs very closely to help them build standards, to help them educate the homeowners within the destination, which traditionally haven't even used property managers. They've just been there forever, and they marketed their business with DMOs. And that gives me a good segue, Alex, to talk about growth. I think in our environment, and you've been here, you've had venture funding, we're in a way somehow doomed to growth. And that's definitely something in your strategy as well. How does, in your view, how does smart growth look like now while 2025 comes to an end, and what you're focusing on 26 when we talk about growth and scale?
Yeah, I think smart growth has to be profitable growth. I think we've learned that also over the last couple of years that that's what it needs to be. And also recently the cautionary tale of Sonder has strengthened that narrative even more. So it has to be profitable growth. Also it has to be growth that comes with great customer satisfaction for both the guest and the owner, which maybe in the early days of the market, it was just bringing on supply. But as you say, the market has matured. There's lots of supply on the market and guests have a lot of different choices. So why should they book exactly your property as a property manager? It has to really stand out in terms of the guest satisfaction. How does smart growth look like for an operator? Can also be through acquisitions of smaller operator. I think this is always an interesting topic to debate, the consolidation of the sector, or maybe the not consolidation. I think there's also still opportunities for smaller operators to get much better tech tools now, and that's something that we're doing a lot of work with RentalReady. Smart growth in city for us at GuestReady also looks like looks a lot into multi-unit inventory. A lot of this multi-unit inventory has similar to what Harald, what you mentioned before, individual properties that maybe are managed by the owner. We see that in cities as well, that small hospitality assets have often been owner managed, but now we have built an infrastructure that an investor could buy such a property and actually just give it to us to manage. And I think typically hospitality operators have been more focused on having on-site staff and having everything on-site. And that's something that we're really seeing changing, that you can plug in these assets into existing infrastructure without adding additional overhead. So lots of great things happening when we.
So in terms of growth, that means you're still running a hybrid way, and then you're saying, look, we want to definitely grow organically in some of our key destinations, and at the same time, we're still looking for potential acquisitions at the same time as well.
Absolutely, yeah. I think we have done 10 acquisitions so far with GuestReady, and we have done some great ones, mostly great ones, and we want to double down on that. And we also learned a few lessons of maybe what works a bit less well for us, at least. And so we're more selective on acquisitions, but I think there's a lot of opportunities also to create really strong win-win cases for both us and the local the operator who sells us their business. We've seen both, and well, for RentalReady, it's purely organic. We've built great technology, and we're seeing a lot of demand and are busier onboarding than ever. So that's not another play where we acquire other technology companies so far.
Yeah, that's an interesting point, which I want to sort of throw it onto one as well. I mean, you've grown through acquisitions as well, and when we talk about smart growth and scale, how does that look like from COCOONR? And I would love to hear some of the learnings you've made with your growth strategy in terms of getting partners on board and making acquisitions versus organic growth.
Our growth is based on both organic and external growth. In terms of new markets, today we prefer to buy, acquire, and integrate operators that are already there, that have done the job with the owners, with their guests, with the local people who they are working with. And we try to integrate them into the COCOONR ecosystem in terms of tools or processes. We began this external growth strategy 5 years ago. And now when we settle on the ground, we try to integrate those actors, and we select them with many factors. Of course, the market and the regulations. We have a real focus on what is possible and what could be impossible to do in terms of development. We have a very high focus on the quality of their homeowners and of their homes they are managing. So we prefer a smaller portfolio, but a greater one. So we are really interested in high-end portfolio, very accurate and very curated portfolios. The latest acquisition we've made this year, particularly in 2025, were really high-end portfolio in 4 destinations that are very spotted destination with the guest. So it's important to have the figures in mind, the KPIs, what we can do in terms of development. We need to have a potential development. We need to acquire an agency or a conciergerie that can be with our acquisition, with our tools and know-how that we can continue to develop in the few years, in the incoming years. Sorry.
Awesome. Look, we've heard a lot. We heard KPIs, we heard quality, we heard profitability. I mean, these are all super important pieces for, we talked about smart growth going forward as well. It's interesting to hear also from Anton saying, we're actually, to enter new markets, we rather go with acquisition, integrate. So we have a playbook so we can make that happen a lot faster. We want to focus on quality inventory. How do you guys approach that, Harold, in terms of sustainable profitability and choosing the right markets? I mean, is there anything you can add in terms of the colleagues that they're focusing on about smart growth?
Well, we're also focusing a lot at franchising at the moment. We're actually using our model and using our headquarters as we do now. We actually use our headquarters to do bookings, to do payments, to do everything which is technology. And we have a booking team which is quite consistent centrally. And we actually locally have our offices. And also these offices can be owned by us and can be owned by entrepreneurs. And we're really focusing on that at the moment. So really opening new areas and selected areas to open with entrepreneurs. It's one of the most important projects I think we have since a while. It's quite successful too there. Yeah.
None of you talked about funding and raising capital and private equity and go full steam and like what we're seeing in the United States. And we're seeing a lot of success story, but we see a lot of failures. Alex has alluded to the Sonder case earlier. We've seen Vacasa, flipping over to CasaGo. We're seeing massive multiples being paid for some of the large consolidators like Away Days and many other companies. V-Trips raised 250 million in debt to further expand its business as well. How do you see that in Europe? Is there such a consolidation play actually doable, or is the market environment not the right place for private equities to fuel such projects? Who wants to go first here?
I can answer, but it would be just in my opinion, and in France, I think it's pretty hard to raise money in this area. And the amounts are not very high for the moment, I think.
Valuations are not high, Antoine, or like?
It depends on what you can make in terms of proof of your profitability, of your growth. If you can maintain during a few years or following years a kind of growth with profitability at the end, yes, the valorization may be high or quite in the market, in the middle. I don't think it could be very, very high in such a market. But we raised money with COCOONR at the beginning, first 6 years. We needed money to extend our positions and to begin the external growth strategy. So we had some fund raised 3 times, I remember, and for a total of 4 million for COCOONR. And it was very good because it was enough to drive our strategy, but not too much for not spending anywhere. are in a bad way our fundings. So I think it's good now. We have very good banks. We have 3 banks that are backing our operations because we are profitable for 5 years now, and the profitability is increasing. So for the banks, they take the next step after the funders and after the fund raised, and now the banks are following us because of the good figures of the company
Yeah.
and the profitability of the company. So it's quite now became a company like another with a good track record and with a very high growth. We have between 25 and 30% growth each year, so it's quite good, and we need to be focused on this growth and to have an eye or two on the profitability at the same time. So the fund raised were very useful for the beginning of the journey, but now we consider, even if we stay in France for the moment, but maybe it will be another thing if we intend to go for in other country, we will need to raise more money, maybe. But for the moment, we have enough with our profitability and banking.
Well, that's impressive that you build a business that, you know, is now, after a couple of fundraisers, sustainable and profitable, and can even, you know, fuel acquisitions from its own generated cash flow. Going back to the original question in terms of PEs and what's happening out there, I think, Harold, wouldn't be a secret to say that there was a lot of interest in your business, especially recently with some of the big boys, you know, making big transactions. And when you run the stats in Europe on STR companies, then you come probably one of the top 10 as well in terms of listings and size. How do you view this? I mean, you're very similar to Antoine, where you fueled a lot of it with your own cash flow, and you never really had to raise a lot of capital. But now, you know, do you see the opportunity? Because I think Antoine made an important statement saying, you know, valuations are also tough and raising capital is also tough, right?
Yeah, I really see it. I have to say, I've been we've been bootstrapped so far, a bit like Antoine. We've been bootstrapped so far, and we've been financing ourselves. I do see an opportunity indeed to become a real big player. You actually have to go that way, I guess. And of course, in Europe, it's not like America or in Asia, where these fundings are extremely aggressive, I think, and I see mega funds coming in, pumping a lot of money, and then, as Antoine says, doing maybe even crazy stuff, like not the right things. But I'd be open actually for having a good fund and actually going into even a big acquisition mode. We also acquire quite many companies ourselves. It's mainly actually buying their packages of owners rather than buying a company. Sometimes we even take over the people, not often. But that's also quite a good growth model we have. But we cannot play big, so we can only play in the small ranges, 20, 30, 40, 50, 200 homes. We can buy them off the market. And put our own way of working and our own model onto it, actually. Yeah,
Alex,
but it would be nice to have bigger. Yeah.
There we go. I mean, you know, as I said earlier, we're doomed to grow. I think that's something we're seeing in a lot of other geographies as well, that things need to get bigger to create more scale, to create a higher valuation, to increase potentially profitability, as margins are being compressed with higher operating costs and distribution costs and many other things. So at the end, you need to think somewhere bigger, but it's still challenging at the same time to make that happen. Find the right investors that understands what the growth story looks like and where the unit economics are, and how you generate more value. Alex, what is your view on that?
My view is that obviously in the US you have more capital available, but probably also you have more ability to deploy it quickly with bigger operators and a more coherent market that is just one single market that is much bigger. Obviously, each state also has their own regulations there and so on, but it's easier, I think, to just deploy the capital. And I think here in Europe it's a bit more fragmented. That said, I do see opportunities for sure to also do such a consolidation play. and there are bigger operators in each geography that you could consolidate and bring together. And even within each geography, there are many mid-sized players as well that are open also to look at an exit. So I think there's definitely a play, but yeah, I think if you can show the story, then the capital will follow. It's not the other way around. It's not that there's just capital available. It's more about showing a good story and then raising
without
the
a
funds to do
doubt.
that.
And we haven't seen really these stories. If you look at the legacy operators like Novasol and Interhome and others, they grew over 50 years, mostly organically, very little acquisitions, built a brand, etc., etc. But I think now we're seeing definitely some different momentum within the market, and some of the conversations definitely need to happen as well. One thing we touched on earlier, which I want to touch now, go deeper, is local versus global. We always say short-term rental is a hyper-local business, and having been with Interhome for 10 years, looking at what we centralize versus decentralize, working in multiple markets. It doesn't matter if you're only in France, working in many different markets, or you at GuestReady, or even Harold working in many different markets. What can you share in terms of your learnings across the markets you've been in? What needs to happen local, what needs to happen global, or more centralized as well? And we've seen that in the conversation at Vacasa, which have centralized all the customer service and then decentralized again to homeowners because they wanted to be closer to the homeowners. What is your sort of secret sauce when thinking about what you centralize versus decentralize, local versus central?
Well, secret sauce, I'm not sure if it's a secret sauce, but I would say I agree with what you said. The owners are fundamentally local, and these relationships need to be local. And anything that is related to the actual property, the maintenance of that property, the cleaning, linen, all these operations, that's hyper local, actually by city and by location. But on a global side, I think there's still a lot that is global, which is the distribution, the technology. On the guest side as well, communication with the guests, I think that's fairly global. Of course, then there needs to be a great link to the local team, and there needs to be processes and SOPs that allow that, and the technology that allows those SOPs. And that's how we've been running things at GuestReady, that the distribution, anything related to the guests is global. The technology is global and works across any kind of country. And that's also why Rental Ready, we have many customers in lots of different geographies, and it works perfectly well. There is technology, the way how you handle your cleaning operations, your task management, your communication with your guests and so on. It's the same everywhere. But yes, you need local teams and the local support for your owners.
Moving on in terms of that topic, local versus centralized, we can also talk about brand, and I want to extend that to the conversation about brands, Antoine. Since I understand that COCOONR should be an overarching regional or even a national brand versus the local operators that you have either acquired or build up from scratch. Do you think you can build enough local trust to build a regionalized brand?
Oh yes, I think so. We try to integrate, and the agencies are conciergerie in COCOONR, and of course one of the main seeing point is that we just have one brand for everywhere, for every agency, because our brand is our service, and it includes the tools, the know-how, the processes of work, and we try to put the brand in the brain, and it's a new one, but I think the name is good, and I think we can have something homogeneous between all the markets if we intend to. So I think a European or a worldwide brand in this STR market is possible, but you have to be really strong in the local areas. You have to drive the operation really clearly, and you have to be really trustful with your homeowners, partners on the local field. So it's quite difficult, and that's what is really interesting in this project. It is to try to innovate in this in the way of you're doing your business. It's not only digital, you have tech inside, but at the end you are very local. You have to maintain houses, you have to do the cleanings, to put the linen, and that's what makes this project really interesting.
Wow. Okay, you made a very bold statement. I don't know if I'm ever going to see that somebody builds a global brand in the STR space. I've been waiting for it for 20 years. So it'll be interesting to see with there's still a lot of work to do. But yeah, who knows? I mean, it just also requires a lot of investment, but it starts at the local level. We're building the trust.
Maybe I can add something here also to this brand aspect, if you allow. I see it a bit similar to you, that I think there's a lot of value to a brand, but I think the value to a brand is much higher in markets where there's less transparency, or much bigger markets. In small markets where everyone knows each other, I think it's really just, in the end, it's just about the service also, as you say, Antoine, right? You need to deliver the service. And we found the value of the GuestReady brand highest in markets where maybe owners don't know every single local operator, and then they just default to the most well-known brand, which in most of our markets is GuestReady, and that's been very helpful. But in a small market where you then just ask the neighbor, hey, which property manager are you going with? I'm sure there is still a value to the brand, but like we found it less so. So that's why we're focusing generally a bit more on the big markets with GuestReady, and on the smaller markets empowering local entrepreneurs with Rental Ready. That's been our strategy.
Moving on from that, and brand is something we could talk for a long time, and it's a very emotional conversation as well. I want to bring back the original question about central versus decentral. So with Harold, I mean, you are growing in different ways now. You have a sort of a hybrid business model. You made acquisition, you grew organically through the existing destinations that you manage, and you also now going down the route of potentially offering franchises as well. And what is your, coming back to the word secret sauce in your business, what you think to build an efficient business, a profitable business, a growing business, what you believe is best to centralize versus keeping local with your operations?
Right. So for us, it's an everyday discussion. This actually is very, very important, very interesting to see that we're actually trying to grow as an oil stain around where we are. I'll give you an example of Lake Garda, north of Lake Garda. Just north of Lake Garda, we have 4 offices at a 5-6 kilometer distance, one to the other. And you think that's completely crazy because why would you do that? You can drive 5-6 kilometers to see your property manager. But actually, people actually own a house in a small village called Torbole. They don't want to go to Riva del Garda, 5 kilometers that way, which could be an hour in summertime, to actually give the keys of their house. And that's how local it gets for a property owner, I think. And of course, if you want to convince owners who never actually rented their house, you have to even be more close. So a place called STR, it's a ski area in Italy. We're just opening the 4th office as well in that place. And it's crazy because you could say, okay, why don't you go in the beginning of the valley, you stay there, and people come to you, but actually people want to see you close there. And for us, it's there's an extreme big division between our global operations, which is in Lugano. We have a back office in Delhi as well, in India, where we do everything we can do to support our local property managers to do as little as possible about everything which is bureaucracy, anything which is trade, which is anything which is to do with bookings or communication with the guests, and everything you said before, Alex, as well. So that's what we try to centralize. Everything we can, we centralize in Lugano. And the local guys have to acquire homes, keep good contact with the owners, be their partners, be the local buddies, know the shoe size of their kids, which is actually what they want. And then afterwards, make sure, of course, that the guest and the owner, when they come in, that the house is in perfect condition. That's what they're looking at.
Centralize, that also implies technology, and I think that's one of my favorite topics as well. And talking about technology, and I know Alex has been waiting for us to talk about this topic right from the start. We're having different approaches. So we know Antoine, we know Harold in terms of how they go about tech, and obviously how GuestReady is going about tech with Rental Ready. And sometimes people know me as the devil advocate and say, hey, why are you also building a tech stack versus, everybody builds a tech stack. I once wanted to commercialize my SAP-based PMS at Interhome. That's a long time ago. And we even had the rights from SAP to do that. But we never did because it was just not commercially viable to actually sell software versus running a business. And I would love to hear Alex's point. How did it come about? Building obviously GuestReady, a lot of need of tech, using some, building Rental Ready, and a next platform where you can offer these services as well.
Yeah, and it's been a long journey for us on the tech side too. And we knew that we had to have great technology to scale this business, but we never said that we have to build it in-house. It's just that when we started to use an off-the-shelf PMS, it was helpful, but it didn't have a lot of the aspects that we as property managers really needed, and that were a lot related to the actual operations, to the relationship with the owner and owner dashboard, to relationship with your providers on the ground to manage the cleaning and linen and so on, to message, to have a great relationship with the guests and the messaging and how that's all connected, and particularly also the property data that you need to know of every single property. We Rental Ready facilitates hundreds of fields about every single property that you can take down. Things like how does the washing machine work, which make and model is the oven, where are the fuse boxes, stuff like that, which lots of PMSs that were built by people that never managed a property in their life. They didn't really have this kind of information, because it's nice and good to put the fields that you see on an OTA and those amenities that you can advertise, but in reality guests ask a lot of questions about stuff that is not on the OTA listed. So we started to build on top of that PMS that we used in the beginning, and slowly but surely we had replaced all the different elements, and it just became an expensive channel manager. So we also did that, the connections to the main OTAs. We have our own channel manager at Rental Ready. And the journey to sell it and to the market was more driven by a pull from the market, that we got other property managers that were quite excited about the software. And initially we hesitated because we said, well, this is, like you always talk about the secret sauce. We always said this is our secret sauce, so why giving it away? But in the end, our space is so fragmented, and even the largest players only have a small percentage of the market. And I think as operators compete more with themselves than with other operators, actually. It's just about having the best operations. And that's why we then said, let's open it to the market and actually monetize this software as well, and be able to reinvest into the software, the proceeds that we get from other property managers using it, and be able to invest more in the software again. And that's been the journey that we've been on. But it's been what you said before, that like first when we opened it in 2019, it was not a system that was very usable by external property managers. So it took us quite a few years, I would say up to maybe 2 years ago. We did a lot of work to make it very, very user-friendly to other property managers. And since then, we've seen like NPS of over 50 from other property managers. But at the beginning, it was tough. People in the early stages didn't really didn't really get along with this system, and only afterwards it became very user friendly.
Well, it's definitely a very interesting journey, Alex, and congrats on the progress. It was interesting. Recently, I had Amiat Soto, founder and CEO of GuestReady, on my podcast as well, and we talked about scale and market coverage. And even he said, "Look, we're only just scratching the surface. The market is massive, and market share is still, negligible in the total number and scheme of things, and it will take a while. And if you find the right customer to use your technology, they will be out there and helps you to make progress. And it underlines your approach of centralizing a lot as well with your own proprietary tech. And I would call Rental Ready obviously proprietary tech of GuestReady while you commercialize it for third parties. Antoine, what is your view on technology within COCOONR? You're very service driven, you're very local driven. You talk about quality, you talk about standards, you talk about relationships, you talk about staff. What is your approach on technology? Is COCOONR building its own tech as well, or are you using commercial technology?
We have the same journey as Alex. At the beginning of COCOONR 10 years ago, we tried to find a tool that could help us on a daily basis, and really quickly we decided to build our own one because we had a lot of attendees, and we wanted to be able to do whatever we have to do with our tool. And two of my associates were able to build this tool. So it was a luck, and that's why I proposed them to join me as associates, because they were able to build some such tools. So we have today our own PMS, which we call COCOONR Manager, and we are connected directly to Airbnb or Booking or Vrbo with Rentals United as a channel manager. But we don't use anything else. It's our own tool, and we wanted to keep our margin. It was an economic choice as well to build our own tool. At the beginning, for the first 5 years, maybe it was expensive for the company because we were really small, and we have expenses on technologies. But now it's a really very good choice in terms of margin. We keep our margin, and when we acquire local actors, we are really surprised of how much money they spend on tech stack. It may be from 5 to 10% of their revenues.
Of gross booking revenue or commission revenue? Gross booking revenue.
Yeah. So it's a lot, and it's too much for a small company to have so many euros to as expensive in tech stack. So it's a very good choice when you have a wide and a large ambition for your company to have your own PMS. So we don't regret it a single second. But we choose to keep for ourselves, so it's not the same journey as Alex. For the moment, we may be at the same stage as they were in 2020 for GuestReady, Rental Ready. If we wanted to drive it to the market, which is not an option, I precise, it
Alex
may
is very
take us...
yeah,
I'm sure. It may take us 2 years to build this tool for external customers. So it's not a choice we are making, but we are very proud of our COCOONR Manager, but it's very deep. It goes very deep in the know knowledge of a property
Yeah.
much more than any other payer.
Yeah, that's interesting. That's exactly the point that Alex mentioned as well, which is interesting.
Yeah.
And just to add here, we always welcome friendly competition. I think may the best one win.
So Harold, it's no secret that you run your proprietary PMS as well, which
We do, yeah.
this is incredible to have 3 of the largest PMCs in Europe on the panel, and they all run their business of proprietary tech. When are you commercializing yours, Harold?
Well, we started in 2007, so there actually was nothing available in that sense. So we actually had to start ourselves. Yet we're also very happy. I confirm what Antoine says as well, what Alex says. It's very good to have our own. We also have our own channel manager actually included. So the only thing we don't have included is our revenue management. We have an external revenue manager. And that's working also very well. The rest is actually in-house. Tech is so important for us. We have 12 programmers doing nothing else than programming. It's myself actually. I would say I dedicate 12, 20, 30, sometimes even 40% of my time to actually the automation of everything we can actually, and that's so important. When we go on the market with the tech, I want to do that. Actually, that's the plan, and not as tech itself, but as tech in combination with all our back office. So actually give a ready products
Franchise.
that's right. Yeah, as a franchise, as a white label. That's the idea indeed. You guys as well. You see so many property managers out there, still with all the keys in the car and so manual, so incredibly manual, doing still Excel sheets and everything. And these guys, I think with just a tech system, it's a start. But actually having a tech system and all the back office as well to it, that's our way to go actually in this field.
Yeah, that's super interesting. And that sort of leads me to the last question that we can cover in our podcast today about, like, we heard so many different facets of the challenges we have, the fragmentation, the regulation, the standards, the tech, AI we haven't talked about, but we all are in the midst of that bubble as well, help us automate things. We see massive industry shifts within the STR industry. While the business in its core remains the same, hyperlocal, relationship is still one of the key success factors in this business with owners, delivering guest experience, having good quality products. I mean, we've covered so many different areas, and I've been in this industry for 20 years. And one thing that I'm still on the lookout and the search is what is we talk about the winning model, right? So we've seen a lot of different approaches within the winning model of the STR. We've seen massive consolidation because of absolute failure for many, many reasons, lack of integration, lack of unit economics in destinations, and many other challenges, not building a consumer-facing brand. While European larger companies have been around forever, for decades, but still interesting enough, when you combine the 4 to 5 largest STR companies in Europe, they still have less than 2% market share, right? So it's actually quite amazing. So it's no surprise that we have been on the hunt and the lookout on what are the winning business models out there. And we have now 3 property managers here today who run their proprietary technology, which is extremely impressive, but makes also sense from where you guys came from in terms of scale. History, 2007, not a lot to choose from. Alex knew he needed tech to build his business efficiently, and so did Antoine. So I think all of that makes a ton of sense. But now we're on the lookout in what is the winning model? We also heard that so far nobody's been able to really build a consumer-facing brand like a Marriott or a hotel brand. So that's also still not happening yet. And the question is, what will be, in your view, the winning business model that delivers, growth, unit density, profitability across multiple markets within Europe? How does that look like? And I would like to start with Alex on that.
I would say there are going to be multiple winning models. I don't think there is exactly one. I think also it really boils down to execution of each of these models. You can execute extremely well, and I think you'll have a winning model, or you could execute poorly, and then you have a not successful business. I think when I look at GuestReady, we have 2 main models. So GuestReady and Rental Ready. With Rental Ready, backing the local entrepreneurs, and with GuestReady, we're a large-scale operator, quite focused on urban areas, doing more in multi-units, midterm, and so on. So I think there's different ways. And when I look, for example, a comparison with e-commerce, you have Amazon, that is clearly a winning model, and then you also have Spotify, that is the winning model. And with GuestReady, we want to be the Amazon, and with RentalReady, we want to be the Shopify. Sorry, not Spotify, Shopify of short-term rentals. So I think they're going to be winning models, and even in between, the franchise model, I think it can also be a winning model. In the end, I think it boils down to execution, and hospitality, even in the hotel space, is so fragmented and has space for multiple winning models.
Antoine, what is, in your view, the winning model? Maybe even the French market?
I don't know. We hope our model is good, but is there only one? I don't think so. We try to build several possibilities in terms of value of the chaîne de valeur. I don't know how to say it.
Yeah, value chain.
Value chain. Sorry. So we began building a strong local brand and strong agency and local field. We then developed another brand which was Book and Pay, and we have now gathered the two brands under the COCOONR umbrella a few days ago, and we are launching in a few weeks a new way of addressing the market, to offer the property managers, conciergeries, agencies the possibility of advertising some of their homes, some of their portfolio on COCOONR.fr. So it's a new product, a new service we are offering, a platform, a marketplace for professionals, only professionals, and curated portfolio. We can address this market with for the property managers, and we can add only the product we want on the platform. So we are launching this new product in a few weeks. So we will be connected with PMS and channel manager across France, but across the globe as well. So it's a new way for us for addressing this market. So I don't know what will be, if there will be one winner or something else, but I hope our strategy to build the COCOONR brand and to build a new reflex for the customer, for the homeowners and the guest. I hope this way of doing the growth is a good way.
So that's interesting, like for Alex, and that's a great strong takeaway, like in terms of execution. Now also, Antoine, leveraging your own strength and building business on top of that is obviously something that can be very interesting. So there's not one winner takes it all, but I wanted to ask Harold as well, and he has experimented in a lot of different models, if you wish, from where he came from.
Yeah, we've also seen, I think all of us, some big acquisitions in Europe going in my opinion, the wrong direction. They kind of delocalize. They actually go very global. They go very centralized. They do forget about the owners. They do forget about property management, actually, the hard work, which actually is the less sexy work, but it's the most, I think, it gives you best foundations in the properties, and actually it opens up more homes. I think that's not been a very good lesson there, so I think we can do that much better. And in my opinion, the secret sauce is to become extremely good on a global level, let's say, be the best in class in terms of answering guests and being bookable and being visible, having good SEO. And all these things you can talk about globally and then be extremely local on the other side. That can be any way, but it be extremely local on the other side to be close to the owners, but also to open new homes which have not been there yet. Because again, we can do 3-4 times more if we just open these homes by being there and actually giving the possibility to the owner to have a trustworthy partner to actually manage their home, and then be there locally to open the door. And yeah, what they say is, to me, is like they need a door to knock on. Actually, if there's any problems or any opportunities or anything to do, they need a local door to knock on. And I think that's an interesting, I think, taken by my opinion. Be extremely local and be extremely global on the other side, and combine the two. And that's what I missed a little bit in the acquisitions I saw. And when I talk about Simon as well, they've been going very global, great, and of course that's where the money is. But on the other side, if you forget the local, then the property owners and the homes, then it gets more and more difficult, in my opinion. The market gets very short, very very very, very small, because.
So that's the balancing act going forward between local being local versus central or global as well. And that continues to be so, because one of the biggest assets we still have as the industry is trust, and trust is hard to scale. So I think that summarizes it extremely well also from your side in terms of what the challenges are and where you want to go. Very few operators have local service offices within 5 kilometers of each other. So that truly underlines the local aspect of your business as well, and being where the owner wants to build the relationship. So I think that's absolutely key as well. Now, being mindful of time, and we're nearly up in an hour here, I've got a rapid fire, and I would like to ask the question, and then we go first with Alex, then with Antoine, and then with Harold. There's 6 questions. Actually 7, I'm going to throw one in addition. So let me start with the first question. Rapid fire. Growth or profitability?
Both.
Antoine?
Both, of course.
Yeah, so far
Harold.
it was growth only. Now it's both. Sorry, yeah.
Oh my God. We're off to a good start. Local or global?
Let's say here local.
Glocal.
Same here. Yeah, local. That's it.
Oh my
Sorry.
God. You managed well. OTA, partner or necessary evil?
Clearly partner for me.
Partners
as well here.
Yeah, that's the political correct answer. AI, game changer or hype?
Game changer.
Same here.
Game changer.
What city best represents the future of STR in Europe or destination?
Oh, that's a tough one. Let's say Lisbon, because I think they're very they're sensitive to the regulation. They're not they have restrictions, but it's not like completely forbidding it, but also not just completely opening the floodgates.
Lisbon.
So it seems quite sensible there, at least from what I've seen over the last couple
Antoine,
of years.
you only have French destinations to choose.
It's so hard. Maybe Marseille.
Okay, interesting. Harold?
It's a difficult one for me as well, because I don't have many cities, to be honest. But let's say Zagreb.
Destinations.
Zagreb in Croatia.
Zagreb. Interesting. One lesson you wish you'd learned earlier as an operator?
I think what comes to my mind.
It's good you're first, actually, Alex. I like that. Yeah, go for it. Or you,
I'm
Antoine?
always thrown in the deep end.
I think we all know now that it will take time.
Interesting. Yeah, great point. Alex, Harold?
Well, we once acquired a business, and the whole company actually. And I think that was actually a lesson to learn. It's probably better to buy owner, let's say, packages, let's say, contracts, than it is to buy a whole company actually. And if you buy a smaller company, of course, if you buy a bigger company, it's of course much better to have a company. But that's one small lesson I think I would take away, and we don't copy anymore. Did that help, Alex? No.
I do agree.
Alex has done everything perfect.
No, I would say seasonal markets are hard if you're doing the full property management. If you're doing the real end-to-end property management, that's hard, especially hard if you're a global player. So that's why we're typically focused on more year-round markets now with GuestReady.
Yeah, I think that's a great input
Good point,
as well.
Alex, yeah.
And That's an extremely good point as well to think about. And you know, all these aspects are very important. One thing we definitely need to improve: rapid fire. Maybe in a year's time, when you're coming back, we do a revisit on what we have discussed, and then we do a rapid fire based on the last 12 months. But it's been a great pleasure to have you all, Alex, Antoine, and Harold. Thank you for openness and your depth today. We've covered a lot: consolidation, regulation, business model, challenges, technology, people, trust. There's so many aspects about this business. Sometimes you wonder why people are in the short-term rental industry, but once you have the bug, you stick to it, and it's still a lot of fun, and that's why we're here. What stands out is that there is no single European playbook. I think that's something we can take away here, but there is a shared drive towards professionalism, operational excellence, and long-term sustainability, and most importantly, profitability. See you next time, and it was great to have you. Thanks, Harold. Thanks, Antoine. Thanks, Alex.
Thanks a lot.
Thanks, Simon. It's been great to be here.
That was STR Global Unlocked, where we say what others won't. If you got value from today's episode, send it to someone who is still playing it safe. Follow the show and get more global insight at ajlatelier.com. The globally recognized STR consultancy I founded and that proudly brings to you this show. More bold conversations are on the way, so stay tuned.